Hello everyone, this is Twisted here from 𝗡𝗔𝗦𝗏𝗘𝗧, and I would like to run through the NASDAQ TA for the market update, and let's get some interest zones marked out on the charts for the upcoming days and the upcoming month. So working with the weekly time frame, I have a couple points marked out, which will be this swing point back in March and last year, and then this was the swing point back in November 2021. So these are two highs that were formed. There were considerable highs on the weekly time frame. This was the low that was taken out by this high, and recently last week we closed a massive bullish candle, which was actually a confirmation of a prior week's close above, and we did dip back down into the range 50% mitigate, and then we pushed further up. We did see some stocks in the tech industry reach all-time high, namely Nvidia, and we did see some higher prices in other tech stocks too. So looking at just the market structure analysis of this swing point at the moment, so the lows are holding. The high was taken. Now after every break of structure, what do we see? We do see a pullback. So we can definitely expect a pullback further into the range before we start forming structure to the upside, or we can see rejection around this order block, and then we can see downside. But to be more precise with things, I would like to mark out some liquidity points, and the first liquidity point that I would like to mark out would be the first one here. That was a swing point back in April 2023, last month, and this will be the interest zone for me when we start breaking down. So if we start breaking down, we start seeing some bearish structure and the highs are holding, this will be my drawn liquidity for the upcoming weeks, and when we start impulsively breaking down. The second point of interest will be around here. This was the swing point that was the high that was taken out around here, and then we saw this massive bullish candle. So this will be our second invalidation point as well, where we would come back down, and then we can just reject off and we can go further up, because swing points like this can tend to become, once resistance now turns support and price will support, and then we start push further up from there. So two areas that I have in mind on the weekly, I'll clean them up and put them up around here with liquidity here. That's a better one, and that was a swing point, so we just mark that as a fractal high that was taken out in here, so we just have a confluence in there. So lastly, we will also mark out a midpoint for the range that we are in at the moment. We just started the week, so right now we do not know if this is the high or whatever, but at the moment this is the midpoint, which is just below the break. So this area can also become a confluence for price to come further down, mitigate that, go further into the deep discount, and then we can push further up, as this will become our drawn liquidity for later, or then if we start pushing down. These are some areas that I'm looking at. Couple things I can also see here before I move into the daily time frame will be fair value gap on the weekly. So that's number one, and this is for now, it's an open fair value gap. We do still work with fair value gaps on the open side, because they also tend to become support once price has broken through and can come down and rebalance. So this is the second fair value gap that we see here, and we also see a minor imbalance in here, which will also act as the opening gap for this week. When the price opened up, we opened up with a massive gap that will eventually be filled algorithmically, and then we'll push further up. So that's on the weekly. Dropping down onto the daily, what do we have here? So we'll just keep it a bit cleaner here. So that was the fractal high that I was talking about on the weekly time frame. This was the liquidity low for the weekly. This was the weekly midpoint that we have marked out here. This was the fair value gap on the weekly. So we just mark that as a weekly fair value gap. It's a bit better. And that was the same thing, but this is further into the discount, so we'll just leave it like that. On the daily, I do see one more important zone, that will be this sell to buy wick, so or this flip zone, you can call it that. So price did basically just tap into this fair value gap that we marked up, and then price pushed further up. So this was technically mitigated but not fully filled, so we did have a tap, we push further up from there. So this can also be marked out on the daily as this is the fractal high and this is the fractal low, and then this was taken out around here. So that was the sell to buy wick. So there, and we can move that here. So this sell to buy wicks are very important wicks because they technically become flip zones later for price, so price can eventually come further down into the discount and push further up because we do have some volume, or if we have swing points around here, which will also act as a massive liquidity pool for prices to come mitigate in later stage. So sell to buy flip zone marked on the daily. This is our liquidity zone for the daily as well. So we'll just use one more of this. There we go. And this will work out as a daily weekly zone. Daily liquidity zone, which is in the discount of the weekly swing, accommodated by our fair value gap. So we have 1, 2, 3 confluences in just the discount zone, so we can definitely see some further push up from here. If not, if we break down, we can always see some further push up from this fair value gap, this inefficiency, this inefficiency. So that's also on the table, of course. And I would also like to mark this little imbalance in here, which will also act as support or resistance if we start breaking further down. So we'll just leave it like that. So on the daily, this is what I have, and I just also mark out the, there we go, so refined zone for the fair value gap on the daily that we will like to see fill. And one important thing, this was our opening gap. This was our opening gap, so I'll mark that out as yellow. Everything is a bit too yellow, so we'll go with blue this time. We have blue as well, so red. There we go. So this was our opening gap, so price closed around here and then we opened up here. We did push a little bit further down and then we are traveling back up. We have a bearish candle, so we can further drop down into the 4-hour. We have 3 candles. We can drop down into the hourly time frame where we have a little bit more structure. I do realize the chart is a little bit messy, but if you were following along, you know what these boxes are. So here we did see the price zoom right into that zone. We did see price open up here, and then since that we have been coming down. We have come down into the weekly fair value gap, and we are pushing up. So right now on the hourly we do have a range, which is from here until here. So this is just the range. I can just clean that up and make it an hourly swing so it's easier. So there we go. So I have taken this point high and this point low. So right now we are in that range, so we can easily break through the range and we can travel up, or we can come mitigate that, hold these highs, start rejecting, see impulse, fill this imbalance, and we further travel back up to the 50% of the initial dealer's range, and then we start snapping back down to the downside. So that is also a possibility. So we can see a reversal, but I would like to see some impulse candles. I would like to see some big bearish candles that are formed around here when we start breaking down. So bearish candle, bearish candle. Okay, so now once I have these candles, now I will know that, okay, yeah, this will become our eventual drawn liquidity. So the way I will like to enter will be that when price pushes further up into those zones to mitigate, this will be where my entries will be formed for further push down. So I would like to see some entry models form around here. So this is just hypothetical, but this is how I would like to see price react from these areas. And once we have some break structure here, this will be my shorting opportunity once we start clearing the lows with impulse to the downside. Clearing that up. So at the moment, this is what I have for NASDAQ. We do not have a lot of data to work with as it is just Monday. Also, New York is closed for Memorial Day, so we will see some more price action or some more volume going into Tuesday. I would also like to compare the price and the chart over to ES, and I wanted to show you something very important that will be significant for the upcoming week, and that's here. So we'll just there we go. So for ES at the moment, we still have not cleared the highs, but for NASDAQ, we do have clearing. We do see that we have impulsively cleared the highs, and this is the drawn liquidity for NQ or reversal, either one of them. But for that, this is the same price. This is the same time. I mean, on the 28th of March. Last 2022, where price will be drawn towards before we start rejecting. For NASDAQ, this is a little bit too far for NQ at the moment, but this is what we have as a drawn liquidity, 43.28 for ES, and this will be a reversal, or we can start reversing back down from here because we already are in a balanced price range where price has given us upside pricing and downside pricing. So this is a balanced price range. We are in here, 50% mitigation or fulfill, and then we can still drop further down. So just a little bit of confluence or correlation that you can see between two prices of NQ and ES. So hopefully this was helpful. And leave a comment down below. There are links to our Discord where we send out detailed analysis of different assets, and it's a fun community to be in. So please do come join us, say hi. Heaps of educational material in there. So yeah, heaps of fun stuff in there. Hopefully I'll see you guys in the comment or in Discord. Until then, take care, and I'll speak to you guys next time.